Triangles. The first type of continuation pattern we will talk about are triangles. There are a few different types we'll discuss. But first, let's talk about them in general. So triangles are one of the most well-known continuation patterns. Most of the time, a triangle will signal a continuation of the prior trend. Occasionally, a triangle will signal a reversal of a prior trend. But because most of the time it's a continuation, that's what we will interpret it as being. Right? So more often than not, a triangle, whenever we see a triangle in the data, in the chart, it means that the prior trend will continue. Now, there are three forms of triangles. We have the symmetrical triangle, the ascending triangle, and the descending triangle. We will, in this lecture, go through all three types, including going through the diagrams and examples. And each of these triangles has slightly different implications. So they each are referred to particular patterns that we see of triangles, and each will lead to a slightly different conclusion as to what the next movement will be. So first, let's talk about what a triangle is. Now again, we will have diagrams later, so try and visualize it in your mind for now. If it's not possible or is difficult to do, don't worry about it, because we will see examples. Essentially, a triangle has converging trend lines. Right, so we will draw a trend line below the price movement and above the price movement, and they should converge. Okay? Converge means they hit each other. And this makes the triangle shape. And the point at where they meet each other is called the apex. Now what happens during the triangle? Essentially, during the triangle formation, volatility is decreasing. Right? Because as the trend lines are converging, the price is staying within those trend lines. So it means that as the trend lines converge, the price up and down movement, or the volatility of the price, is falling. And before the triangle ends, the price will break out in one or the other direction, either up or down. And this is a resumption of the prior trend. And when we see this occur, then the volume should be increasing, and volatility will be increasing. Symmetrical triangle. Now, as mentioned, there are three different triangles we will discuss. There are the symmetrical triangle, the ascending triangle, and the descending triangle. And we will follow a fairly similar format that we followed in the last lecture. So we'll first talk a bit about the pattern in general. Like this slide is here. Then we will go through a diagram of the pattern. So conceptually, what does the pattern look like? And after that, we will turn to a real example. So we'll look at actual charts of real price movements and identify these triangle patterns. And as before, when we identify it on real charts, we'll see that the patterns are not exact. Alright, so let's start with the symmetrical triangle. First, a triangle needs 4 reversal points in order to draw 2 converging trend lines. Essentially what that means is that it needs 2 peaks and 2 troughs. Okay, so if the price is moving, it should go up to make a peak, down to make a trough, up to make another peak, down to make another trough. That's 4 reversal points. And that means we can draw trend lines above the joining the peaks. You have at least 2 peaks, and you have them joining the troughs, at least 2 troughs. Right? So that creates our 2 converging trend lines. Now in a symmetrical triangle, we have the lower trend line is upward sloping, and the upper trend line is downward sloping. Okay? And the trend lines will meet at the apex. As we mentioned, this is the point where they meet, and the price should break out before reaching this point. So the price will kind of fluctuate between those trend lines, and before reaching the apex, it will break out. For most triangle patterns, what we should expect to see is that the breakout should occur between 2/3 to 3/4 of the horizontal width of the triangle. And what this means is that that we shouldn't be getting all the way until the apex, right? That is where the trend lines converge before seeing the breakout. It should occur a bit before that, right? So if we take the entire triangle, if we look at where 2/3 of the triangle ends and 3/4 starts, the breakout should occur somewhere between that. And if the breakout does not occur, that means the triangle loses its validity. So it's no longer a good continuation pattern if a breakout does not occur. Let's finally talk about volume. Now, as the price swings narrow within the triangle, volume should fall. We mentioned this before. I'll just go over it here. And then if we have an upward breakout, volume should increase. Even if we have a downward breakout, volume should increase, but volume is more important for an upward breakout. Now, the key thing to know about a symmetrical triangle, what differentiates it from other triangles, is that each of the trend line has a slope. So the lower trend line is sloping upward, and the downward trend line is sloping downward. And we'll see when we get to ascending and descending triangles that this is not the case. Alright, let's now turn to a diagram so we can see what this looks like. Symmetrical triangle diagram. Okay, so here we have a diagram of the symmetrical triangle. I've got my red dot pointer here as well. So like before, the black lines represent the movement of the price, and these blue lines represent the trend lines that we've drawn to create the triangle. So what are the defining features here? Well, we have the lower trend line down here. This is upward sloping, okay? And we have the upper trend line here that is downward sloping, okay? And we have this point here, which is the apex. Alright, and this will be the case for all the triangles that we draw. Now let's take a look at the price movement. Right, so the price in this case is on a prior uptrend, right? So we can see here the price starts here, it's going up. It makes the first peak here, then comes down, makes a trough here, goes up, makes a lower peak here. So as you can see, the peak is lower. Then comes down here to make a higher trough. So the troughs are rising while the peaks are falling. Goes then here to make an even lower peak, then an even higher trough. And then finally, it breaks out to the upside. Okay? And this essentially forms a triangle. So you can see that we have peaks and troughs that are decreasing in size. So it's like a consolidation pattern. And then the price breaks out in the same trend that it was before. Now sometimes this price will come back down before carrying on back up. And this apex level can sometimes serve as a support level, the new support level for prices. Now we can also have a symmetrical triangle going the other way. So we can have it coming down from here, okay, down like that, making these things, these peaks and troughs before carrying on downwards. So we can have it both ways. Alright, that's a symmetrical triangle, what it should look like conceptually. We'll now turn to an actual price diagram, an actual graph of the symmetrical triangle. Symmetrical triangle example. Alright, here we have a graph of a price movement. Now this UNG over here, that's a natural gas ETF priced in US dollars. So this is essentially the price of natural gas, an ETF that holds natural gas futures. That's not that important. We're more interested in the price movement. Again, it starts from early 2008 until the middle of 2008. So now, let's find a symmetrical triangle. Now, triangles are not necessarily that easy to find, but where I'm going to show you one is over here. So we're going to have two peaks, this one, and this one. And we're going to have two troughs, this one, and this one. Okay, so now let me just draw the triangle. Okay. Yep. Now this is a symmetrical triangle because the upper trend line is sloping downwards, connecting these two peaks. The lower trend line is sloping upwards, connecting these two troughs. Now what's happening in this trend line? I mean, in this triangle? Well, we have a prior uptrend, right? So you can see from here the price has been going up, it's been going up, and then it comes to this consolidation symmetrical triangle pattern. It makes a peak here, then it makes a trough, then it makes a lower peak, then it makes a higher trough. This allows us to draw the symmetrical triangle, and you can see before reaching the apex over here, it breaks out going upwards. So it breaks out going upwards and then carries on into its uptrend. So this is what a symmetrical triangle looks like. Right? We can draw it on the graph and we can see that following a prior uptrend, the chart makes a symmetrical triangle pattern with a rising lower trend line and a falling upper trend line, and breaks out to the upside prior to the triangle meeting the apex and continues on its upward trend. Ascending triangle. Now, as we said, we will be talking about three different types of triangles. They are the symmetrical triangle, the ascending triangle, and the descending triangle. An ascending triangle is a simple variation of the symmetrical triangle. Now, what the symmetrical triangle meant was that the two trend lines were kind of symmetric to one another. One was falling while the other was rising, and that should have been at about the same rate. So when we look at the triangle picture, it's symmetrical on both sides. With an ascending triangle, this is not the case. The key distinguishing feature of an ascending triangle is that the upper trend line is flat while the lower trend line is upward sloping. So what does this mean when we actually create our triangle? It means that when we're joining the peaks, right, so the upper trend line is used to join the peaks, that's flat. So the peaks are actually at the same point. They're the two peaks or three peaks that we're making at the same level. Whereas the lower trend line is upward sloping like before. So we have rising troughs. So we have rising troughs and flat peaks. This is an ascending triangle. Now what this indicates is that buyers are more aggressive than sellers, because as the price is moving, we can see that the troughs are getting higher and higher, whereas the peaks are staying at the same level. So it means that the buyers are more aggressive than the sellers. And because of this, it is a bullish pattern. Right? So an ascending triangle always precedes a bullish upward movement. And because it's a bullish pattern, it should precede a breakout to the upside. Now in contrast, a symmetrical triangle that we looked at before can be either bullish or bearish. So depending on the prior trend, the symmetrical triangle is just a continuation pattern that says the trend will continue in the same direction. So as a result, the symmetrical triangle can be bullish or bearish. However, an ascending triangle is going to be a bullish pattern. Okay? Now a couple of points about volume. Well, of course, because we're talking about bullish movements, volume is quite important. So we should be seeing volume rise on the upward breakout. And of course, volume should fall during the consolidation pattern within the triangle. After the price breaks out, the apex becomes the future support. Prices can temporarily fall back to near that apex level, and that acts as a support. But even if it falls to that level, prices should still continue upward, continuing that upward trend. Alright, let's now go to a diagram and an example after that. Ascending triangle diagram. Okay, so here we have an ascending triangle, and this is what it looks like. Now, it looks very similar to the symmetrical triangle. And the main difference I'm going to point out is that this line here, this line here, that is a flat horizontal line. So this line here is an upward sloping line, the lower trend line, and this line here is flat. So we can see the peaks that are made are all at the same level, while the troughs down here are all rising. And this again here is the apex. Now, let's take a look at the price movement. The price is on a prior uptrend, so the price is going up, and it makes a peak here, a trough here, a peak, a higher trough, same level peak, an even higher trough, and then we have here the breakout to the upside. So it looks very, very similar to the symmetrical triangle, and it is. The only difference is this line here, which is horizontally flat versus it being downward sloping. And again, we'll have the breakout to the upside. One, because the ascending triangle always indicates a bullish pattern, and because we have a prior uptrend. Alright, so now that we've seen the diagram, we'll now go on to look at an example. Ascending triangle example. Here we have another graph. This graph is the rupee against the dollar. So you can see INR, that's the symbol for rupee. We saw the rupee as well in the previous lecture. And what we are going to do here is find an ascending triangle and show you that it starts from a prior uptrend and leads to a continuation of that trend. Alright, so where is it? Well, let's go to the middle of the graph here. So these 2 points here, this one and this one, these are my peaks that are at roughly the same level. So these 2 points is going to create my horizontal upper trend line, and these 2 troughs here are going to create my rising lower trend line. So here's what it will look like when I draw the triangle. I'll draw this like this. Okay, so this is the triangle, and what we can see here is that the price is going up, so it's in an uptrend. It makes this triangle pattern where it makes a peak here, makes a trough here, makes a peak here at the same level, then makes a higher trough, and then the breakout occurs here going up. Alright, so it starts on an uptrend and then breaks out to continue its uptrend. We can see that it falls here, but never falls below this support level, and then it just carries on upwards. So this is an ascending triangle. This is what it looks like. Again, we have to be a little creative sometimes when drawing these. You can see that it's not perfect because this line is fairly steep, but it's still a good enough triangle. It's still a good enough pattern that we would call it a triangle. And we can see that the price movements that we predict, that is the prior uptrend and the continuation of the uptrend, do occur in this ascending triangle pattern. Descending triangle. Now we have come to the last and final triangle we will discuss. This is known as the descending triangle. Now I'm sure, given what we've talked about the ascending triangle, you can probably guess what the descending triangle would look like. A descending triangle is the mirror image of an ascending triangle, and it is a bearish pattern. So if it's a mirror image, let's think about what it would look like. Well, in the ascending triangle, we had a flat upper trend line and a rising lower trend line. With a descending triangle, we will have a falling upper trend line and a flat lower trend line. Right? So the lower trend line will be flat and the upper trend line will be downward sloping. And this will be a bearish pattern because what we will have is falling peaks due to the falling upper trend line, and we'll have steady troughs as represented by the horizontal downward trend line. And this indicates that sellers are more aggressive than buyers. Okay, so essentially it's just the opposite of the ascending triangle. It will indicate a future downtrend. So a descending triangle will start when a downtrend is already in place. So we'll have a prior downtrend, then we'll have the triangle pattern being made, then we'll break out downwards to create the continuation of the downtrend. Now let's just talk a bit generally about triangles before we go on to our example and diagram. So triangles are intermediate patterns, right? They are intermediate patterns in that they represent consolidation or pauses in the major trend, and they can last anywhere up to 3 months. So we can have a triangle pattern that's a couple of weeks or even 3 months. And if we're doing short-term trading, we can make it even smaller. Now if you remember earlier, we said that sometimes triangles represent a change in trend. So it is sometimes the case that descending triangles can occur at a market top and represent a change from the trend from up to down. Sometimes, just like with ascending triangles as well, they can be at a market bottom and represent a change in trend from down to up. But the important thing to know is that following a descending triangle, we should always have a downward movement. Following an ascending triangle, we should have an upward movement, regardless of the prior trend. So in general, they will be continuation patterns, but sometimes we will also see them as reversal patterns. So that's an important piece of information to keep in mind. Again, most of the time we should just see it as a continuation pattern, but occasionally we will see it as a reversal pattern as well. Alright, let's now go on to look at the diagram of the descending triangle and an example on a graph. Descending triangle diagram. Okay, by now we should be very familiar with this diagram. We should understand exactly how it works. So we'll just go through it quickly. So we can see here now that the lower trend line, this one here, is horizontal. And the upper trend line is downward sloping. And again, this point here is the apex. So let's now look at the price movement. So we have here a prior downtrend. Price is going down, going down. It makes a trough here, then turns around, makes a peak here, then comes back down, makes a trough here at the same level as the prior trough, goes back up, makes a peak that is at a lower level as the prior peak, goes down, makes a trough at the same level, then makes a lower peak, and then breaks out downwards. All right, so this indicates a continuation of the downtrend pattern, and this line here completes the descending triangle pattern. Alright, so again, fairly straightforward, and it is really just a mirror image of the ascending triangle. Let's now go to a graph. Descending triangle example. Now here we are back to the charts, and I've gone back to the natural gas chart that we looked at before. This is a different time period. This is later on, and we can see here the price is in a downtrend rather than an uptrend, which is good because we want to show a descending triangle. Okay, let's take a look at this downtrend. The triangle pattern I'm going to make is going to use these two troughs, which are on the same level, alright, and is going to use this peak here. I'm going to treat that as just one peak, alright, and this one here, which is a bit lower down. Alright, so this peak is higher than this peak. Now we'll just draw the trend line, so we'll have a flat horizontal lower trend line, and we will have a decreasing upper trend line, and they will meet at this point here. So let's look at this triangle now. So we have a prior downtrend occurring here, and the price goes down. Following the prior downtrend, there is a first trough made here, then there is a peak made here, then there is a trough made here at the same level as the prior trough, then there is a lower peak made here, and finally here we have the breakout going down. So here we can see that we have a prior downtrend, and then the trend continues downwards following the completion of the descending triangle pattern. Alright, again, this is fairly straightforward given that we've gone through the symmetrical triangle as well as the ascending triangle. It is just the opposite of the two. Now we've concluded our discussion on triangles. We'll now go on to talk about some other common and useful continuation patterns.